It's feel very, very scary to me, and there's a lots of Canadians, they are retired. How they're going to survive without a retirement plan?
You're raising a very, very important point, and a good one. A lot of people, they worked hard and they tried hard to save, and they did. But how do you plan for economic environment that we have today? You can't.
$1 million value, I got 400,000, for example. And $600,000 is still the equity in the house. And $400,000 is my reverse mortgage. I can use the money instantly, or I can ask, give me in installments whenever I need it. How I can use this money?
Both. How would you like to spend your retirement? Would you like to spend it restless and stressful? Any one of us doesn't want to do that. So
physically, we're getting weak with the age. And also, the energy level is so down. Definitely, we need support. We need a proper health care. Welcome to all my Canadian fellows. I hope you're doing well. So today is segment 8, episode 8 of Life and Loans. And I'm going to introduce one of the expert of the mortgage industry, especially in the reverse mortgages, Mr. Steve.
How are you doing, Steve? Thank you, Vikas. Welcome. Thank you so much. I'm happy to be here.
So thank you very much for joining us for this podcast today and provide amazing information about the reverse mortgages. There's a lots of questions they have in the mind. But let me start from here. Steve, how long you are in this country?
Oh, that's a good question. Well, my parents came in 1966.
Oh, wow.
I'm born and raised here.
Amazing.
Yes.
So the other side, so I came in this country in 1998. So in the camera, we pretty much look alike.
Yes, well, it's a mix of
So we are maybe in the same
Yes.
journey of the, of the life. So, we all actually work hard, 30 years, 40 years, and end of the day, we want to retire.
Absolutely. And this is the scenario from this generation, previous generation. They come to this country for a better life. My parents, they worked very hard. They're now retired and they're still around. Both are over 80 years old. So yeah, the thought when they went when they stopped working was, what do I do next? How do I retire?
Of course, and my parents and me, we're living together. So if somebody asked me, are your parents living with you? I said, no, I'm living with my parents. So
It's a blessing.
definitely it's a blessing. But because being in the mortgage industry, sometimes I do some calculations.
Yeah.
If my parents has to live alone, are they able to survive on the pensions? How they are going to survive in today's world? They came in, I sponsored them. They came in their 50s in this country. And there was a limitations of working for a long time. And so as a son, I tried to provide everything to them. And they did their best to raise my kids. So it's a joint effort to, make a family. But sometimes it's feel very, very scary to me. And there's a lots of Canadians, they are retired. And how they're going to survive without a retirement plan. And most of them own a house with lots of equity in there.
You're raising a very, very important point and a good one. A lot of people, they worked hard and they tried hard to save, and they did. But how do you plan for the economic environment that we have today? You can't. It's hard. I mean, we went through pre-COVID we did our retirement, we did our RSPs, we did our savings on investments, and then COVID came, and then the inflation came. How do you prepare for this? But some people have developed a lot of amazing equity in their homes. And how do we tap into this equity? How do we tap into the bricks and mortar of where they live to help them with this retirement? Because basically that's the retirement.
And So let's extend the conversation, come to the exact the point we are going to talk. And lots of seniors,
Yeah.
lots of Canadian seniors are not aware, and there's lots of myths around it.
Yes. Yes. So there is that one thing. So let me share this quick analogy here. Um, how do you eat bricks and mortar? You can't. But there's lots of equity in this home, and people still need to survive. Some people still have a mortgage debt. Some people have a larger mortgage debt. Some people don't have a mortgage debt at all. But how do you convert that equity into food on the table, into cost for expenses on medications, on upgrading the home so that it's convenient for them to live in at an older age? How to help children who are struggling to find their first home and buy that? How are they able to do that? And this is where the challenge is, and parents are always there to help the kids. Doesn't matter what age. I mean, my mom always says, "You're still my son, no matter how old you are. You're still my son." So, if we think about that, how do parents really feel that they still need to help, and how do they do that? And the idea is, well, let's get right into it. The reverse mortgage, the chip reverse mortgage with HomeEquity Bank. This is this is what we do best. We've been doing this for now. I mean, next year will be 40 years where we've been taking care of seniors. This is all that we do, and we're the only Schedule One bank
Definitely,
that does this one product
definitely.
where we help them to age in place and retire comfortably
Yes.
in their home.
And I consider is our seniors is our wisdom class, basically. They experience the life through the journey, they gain the wisdom, and that wisdom they have to transfer to the next generation.
Right.
And it is our moral duty to take care of them at this stage and advise them, educate them in case they're lacking in their planning. So, coming to the question, if I turn 65 today and I have a house, I have a good equity in the house, what is stopping me to use the reverse mortgage?
There's a lot of misconceptions out there, Vikas, and one of the biggest, and let me put it in a very simple term. Google.com is not the same as Google.ca. There is the American side of the reverse mortgage and how they work, and there's the how we do things here in Canada. As I said, we're a Schedule One bank. We're the only bank that does this product, and by doing this, that's all our focus. That's everything that we do. So we're regulated by OSFI, if that makes a difference. So the high regulations of how business operates here for banks is very different from down south, our neighbors there. And that's one major difference. Second thing is, there's a mindset where, oh, you don't have to make any payments, but how are we gonna? That's going to be a problem for us, isn't it? Because you're giving us all this money. Payments are optional. You can make payments if you want to, and this is one of the misconceptions out there. So you don't have to make payments. If you're able to, you can. So there's that option there. But the misconception, the biggest one is, will the house be taken away from me? That's the biggest one. The answer is no, because as the mortgage grows with the interest over the balance, the house on the other side is also growing in value. So think of it as two sides of the coin. There's a side where the mortgage is growing and the side where the equity is growing. And I've done many illustrations, financial illustrations, just as an estimation to see what would it look like if somebody were to take a certain amount of reverse mortgage and not make any payments. They don't have to, and let that add-on accumulate over balance over 10 years. So a property within the GTA, for example, so Toronto, Brampton, Mississauga, anything in the GTA area, Newmarket. But during that same 10 years, how is it how much does that house grow in value time over time, year over year, on average over that same span of time? There's a reason why we've been in business for 40 years.
Great.
So we don't take the house away from the clients because, first of all, we don't own the house. And that's one of the big misconceptions. We are just like every other scheduled bank out there where we put a mortgage lien on title, just like that, nothing else. So the house stays in the ownership of the couple, of the owners. And that's who owns the house. So that's it.
That's great. So I read it when you turn 55 years old.
Yeah.
So you are fit, you are eligible for this reverse mortgage product. Is that right?
We're starting with 55 plus, yes. So 50, we're taking care of Canadians who are 55 and better. And oh, yes, it is at 55. That's the beginning stage.
That's the beginning of that, right? I'm going with a live example, for example.
Sure.
Because let me assume that house value is $1 million. What is the maximum amount as a reverse mortgage of how much amount you can take it as a mortgage?
As a reverse mortgage?
As a reverse mortgage.
Great question. So we have a we look at two main things.
Understand.
We look at the client and we look at the home.
Mm-hmm.
So when we put those combinations together, we have a calculator that kind of tells us how much we can provide to them, how much we can help them with. And if you think about it, there's a couple who's 55 is not going to get the same amount as somebody who's 65. And someone who is 65 won't get as much as somebody who is 80 or 85, for example. At the same time, there is homes that are single detached homes, and there are condos, and there are in between, you've got the row townhouses and condo townhouses and the semi-detached. So the homes, depending on the value, it would, a detached home probably will get more money than what a condo would. So when we put these two combinations together, we'll know exactly how much we can provide to the clients.
Great. Let's take that example to the next step.
Sure.
So I got approved for the reverse mortgage,
Okay.
and $1 million value, I got $400,000, for example.
Okay.
Right? That is my need. And $600,000 is still the equity in the house.
Okay.
And $400,000 is my reverse mortgage. I can use the money instantly, or I can ask, give me in installments whenever I need it. How I can use this money?
Both.
Both.
So if you're approved for $400,000,
Mm-hmm.
okay, and you need the $400,000,
Mm-hmm.
that's fine. Do you need it all at once?
Mm-hmm.
Maybe you have a mortgage debt of $250,000.
Mm-hmm.
We have to pay that out because, of course, we want you to live stress-free. Not worrying about how I'm going to make my next mortgage payment. And that's what this is all about. How do you increase your cash flow? How do you live your senior life stress-free? So that's one. And let's say, so 250, you have 150,000 left over, and you need that money for upgrading the property a little bit,
Mm-hmm.
Fixing the roof,
Mm-hmm.
upgrading the kitchen, making it more usable because during the time when you were working, you weren't really thinking, now you're spending more time in the house. You know what? I think we have to fix that kitchen because we haven't touched it in 25 years. So that thing comes up. Or maybe they want to get passive income and create a basement apartment. So that's something they could do. Some parents, what they actually do, they use the money to help their kids. Remember, we were talking about that. So that is also another way of looking at that. So if they need the full money up front, they can have it. Or let's say they have no mortgage,
Mm-hmm.
and they need just to supplement their pension income that they're getting already, CPP and OAS.
Mm-hmm.
They say, you know what, all I need is $2,000 a month, just an extra drip over time.
Mm-hmm.
Absolutely, we could do that.
Wow,
We can provide that for them as well. So when I'm saying that we can do both, absolutely we can do both. And that's what we do best. We do this. We've tailored our way of lending to 55 and better in a way that helps them on almost every level or every scenario that we can think of.
Great. So chip reverse mortgage product is so flexible. You can withdraw based on your need, and you can use it. You want to gift to your family, gift to your kids, to buying a house. You can spend on their marriages. You can invest that money for the future. Uh, you can travel with that money. You can use whichever way your hobbies. So there's availability. Main thing is there's availability of the funds. On top of that, you are not paying the mortgage payment on those funds.
That's right.
And that is a great cash flow for you.
You're not making the payments. You don't have to make the payments, but you can if you want to. Payments are optional. So if you're able to and you'd like to, by all means, the options are available for you. One thing that we found recently is how they use the money as well, and we call that early inheritance or early gifting, I guess. There's a client of mine who they took a good amount of money, $600,000, and bought a condo for the grandson free and clear. Here's a gift. And this is another way of providing early inheritance, early gifting. So we're seeing all that a lot. So with clients and gifting to their families.
That's a great option too. And the money we are getting is similar, like we're doing a refinance with a principal home with another lenders. It's tax free, basically.
100% is tax free. It's coming from the equity of the home. So there's no CRA reporting. There's no tax implications on it. And by the way, let's just go back to that monthly drip that we talked about quickly.
Understand?
It's not an income that you're receiving. It's equity that you've been approved for, and we're giving it to you in increments per month. So this is not an income. This is just a drip monthly. So again, no CRA requirements, no tax implications on it. It's your money. It's your home.
Definitely. When I'm thinking about my retirement in the future, so definitely at certain age, you stop earning. You depend on the pensions. You depend on your investments plans. And to keep your health intact, you are dependent on others because you're getting aged. And be healthy, keep the longevity. The money plays always very important part because you can now for example, the private health care system is coming in the future also. So if you have any kind of severe illness, then you don't need to go on the line. If your funds are available, you can go and get that treatment faster and stay healthy for the future. So what do you think about that?
Can I share a small example?
Sure, please.
Okay. So out in the East Coast, a client wanted the reverse mortgage, 72, I think he was, 72 years old. Yeah, and he wanted the money because he wanted to do a knee replacement. He wanted to go down south. It was quicker health care, and but there you go. He took the money out so you can go south to do the knee replacement. So yes, you could use the money for your health needs, for renovation, for children, early gifting, helping them buy a new home. A lot of people are unable to who want to be new home buyers, just cannot afford the down payment. Prices of homes have dropped. We know that. But they just can't come up with the down payment. And Bank of Mom and Dad, this is how it helps. This is how they help. So what else can they use it for? What if they want to buy a car that's convenient, that is right for them, that works for them better than the clunker that they have already?
Definitely.
What if they just want to travel a little bit and enjoy retirement? What if they can do that? That's exactly what it's for.
So another way, so they can celebrate the life, whatever the hard work they did in past couple of decades. They raised the families, and now they're spending on themselves, and enjoying the life, enjoying this. You can say the last quarter of life. We can say that,
Well, let me ask you this. How would you like to spend your retirement? Would you like to spend it restless and stressful? I don't think anybody because I don't any one of us doesn't want to do that. So
And still, physically we getting weak with the age, and also the energy level is so down. Definitely, we need support. We need a proper health care
yes,
and availability of the funds
yes,
that we can eat healthy, we can travel, we can follow our hobbies, and we keep ourselves healthy, in mentally healthy, physically healthy, financially healthy. So
I don't know what the percentage is. I'm not going into the medical side of things, but I know that stress is one of the things that hurts the body the most. You need health, nutrition. You need proper sleep, food, nutrition, proper sleep, and less stress. So how do you get that less stress when you have a huge debt on your shoulders, or you have a need and you just can't get to it, but you have this property and you can't tap into it because you just don't qualify otherwise? You don't qualify for a regular mortgage. You can't get a home equity line of credit or any other kind of loan and the reverse mortgage, you're getting this and you don't have to make any payments. So the balance is that the home also grows in value, and the amount of money that you're borrowed is basically yours.
and it is an equity-based product. It is no income required for that to prove.
We don't need income to qualify the deal. To qualify the deal in the beginning, we don't need it. Yeah, and 99%, I don't know if it's 99, 98%, 95% of the time, we don't need income docs to use at all. So we're not looking for CRA documents. We're not looking for bank statements that are 2 inches thick. By the way, let me share one thing, is that with the reverse mortgage, it doesn't have to be paid back until the last person leaves the property, which is a very important fact that has to be mentioned and known. So because people's minds are thinking, okay, but I borrowed this money, when do I pay it back if I don't make any payments? That is one thing that's in the back of their minds. Only when the last person leaves the property. And it could be upon death. It could be upon selling the home. When they don't own that property anymore, that's when that's triggered back to them.
That's great. A product, you can live in the property till you alive, and you're not paying any mortgage payment till you're living in the property. Nobody can forcefully kick you out from the property. If you are paying the utilities on time, property tax on time, maintaining the property, these are the just basic conditions that we all humans keep our home very tidy, clean, and definitely we don't want the electricity get cut, so we pay our bills on the time. That's the minimum thing we have to do. That's great information, Steve. Let me go to the next side of that now. Most of the parents, before they decide about the reverse mortgage, they want to talk to their family. They want to talk to their children.
Absolutely.
How, being a son of my father or mother,
yes, yes,
the father and mother, if they ask me this question, that we want to go and take this product, which way I should have to support? What should be my mindset in this case?
Great question and great point. A discussion with the family is encouraged. They should speak with the children, because the children are invested in their parents' health as well. And, also this is their future inheritance. How's it going to affect their inheritance? But parents are still here. So what is the important need now? Is it because their finances are tight and they can't afford that house anymore? Well, they're going to have to sell. And what happens after that? Do they need if the kids can't help, what are the parents going to do? Do they have to move out of the house? What if they need it for medical reasons? What if the parents needed to uh, for another reason that we can't foresee, but they need that for that special help?
So, Steve, what message you want to give to those adult children watching this podcast? How they can support their parents without draining their savings, without selling the home, or without going through this stress? Because parents always say to their children that all the assets they accumulate is for the family.
Yes.
And they have that emotional pressure also. And children, they're busy with their own families. Their families are growing, and they have a limited time and resources to help the parents. But yes, there is a reverse mortgage solution. So how the children support?
Well, this is an important point. One thing for sure is that parents should engage the children in this decision making. It's very, very important for them to do that because, like you said, it touches on, well, this is my inheritance.
Mm-hmm.
It's going to be taken away from me.
Mm-hmm.
Well, first of all, again, we have to change the misconception about the reverse mortgage and let them know that, well, we are not in the business of taking the house away. Second of all, payments are optional if you want to do it. Third thing is that we only put a mortgage lien just like every other mortgage lender does and bank. So we're, like I said, we're Schedule 1 bank and only doing this one product. We've been doing this for a very long time and our only product. So we're in the business of taking care of these people because we eat, sleep, and drink this product, basically. This is nothing else that we do. They need to remember that there is no fear behind this, because as there is a loan and there is a interest that is growing on the balance, there's also the flip side where the house is also growing in equity. And we will lend based on the amount that we can lend on this property compared to the people who are owning the property. So when we combine those two things, we'll lend what is appropriate, and we will do our calculation will ensure that that property continues to grow at the same time the balances, and we have something called no negative equity guarantee, which basically means that the property itself will never be less than the amount that's owing. So that's a guarantee that we have in print.
In the simple words, I will say the property value is $1 million. Your mortgage is $400,000. If you're paying approximately average interest $30,000 every year, but in 10 years, your average increase in the property value is 5%, 4.5%. So definitely the property value is also increasing if the interest is increasing, and there's a chances definitely there's a chip mortgage is more than 30 years in this definitely product, and helping our senior Canadians, they must calculate accordingly that this product is not based on negative equity.
That's right. We will it's actually next year will be 40 years.
40 years. Oh,
40
sorry
years.
about that.
So, but 30 years is quite a long time.
Yeah.
But next year will be the 40. But yeah, let's look at it very very pragmatically. If there is a $400,000, let's take an arbitrary interest rate of something 6%, 6 point something percent, whatever it is. Okay, but that house is worth $1 million. What's going to grow more? The 400,000 on 6 point something percent, or the $1 million at 5% year over year on an average on a very conservative average in the GTA, let's say over the same span of 10 years. So if you think about that graph chart is going to go, at over the 10-year
I've seen it.
There's more, that house is going to have more equity in it than the amount is growing. So the financial illustrations that we could show we'll show that. And that's why they should have that conversation with the kids, because we can provide that financial illustration and show them not only as a theory, but in numbers, what it could look like and to change that perception, because everything out there is a perception, which becomes the reality. But we need to change that perception to provide the true reality of what the reverse mortgage is.
Great information, Steve. And that the illustration, I've seen it so many times. And whenever I seen it, it's always, I see it, okay, this is the very best product for the seniors, for the cash flow and less stress, less financial stress, because that age, it is our responsibility to advise them, educate them. They can live their retirement in very peacefully with a financial freedom.
Because they can definitely call you and your brokers as well.
Of course.
And we can support them all. So there's no problem right there.
So, Steve, thank you very much for the great information. And seniors are the one of the pillar of the society we always need, that pillar of wisdom, and educate them and giving them financial freedom. That is amazing job. Over 48 years?
Over 40 years. 40 years.
Over 40 years, Chip Mortgage is helping the seniors. Amazing job, Steve. I should have to clap for that.
Oh,
thank you very much for coming.
Thank you so much. It's my pleasure. And thank you for having me, Vic. For future inquiries, please reach out to Team Vic at Pineapple. They're here to help you, and they're here to look after your needs. And I'm there to help them as well. So we're all looking after you, and we're looking forward to helping you and your families.
Thank you very much, Steve. So hopefully we will sit together again with more information. Thank you.
It's my pleasure. Thank you so much for having me.
Thank you.